Hi folks, I'm Will Bridges from 123 Trade. In this video, we're going to talk about, a silver trading strategy for what appears to be, somewhat of a sideways market the last few months. A lot of traders are expecting a potential silver squeeze. That might be difficult to make happen. I'm going to talk about why that is the case and why it's so much different than, popping a bunch of hedge funds on something like GameStop or AMC. If you guys have seen any of that short squeeze stuff that's been out in the news, but we can address that here in today's video, and maybe a place where, a little trade of the day opportunity on silver. XAG, for you chemists out there. But otherwise, if you do like the video, press the thumbs up. I promise you're going to like the video. You can always uncheck later if you want to. But you can always subscribe, ring the bell if you want to get more access to time-sensitive information like this as soon as we put it into YouTube. So, all that said, let's cover our base. Everything in this video will be for educational, academic purpose only. You do with the information what you think is best. But there is no such thing as a guaranteed trade or investment. You do have to risk it to get the biscuit, folks. So let's get the show on the road. I want to show you guys, most important thing, I want to know what the managed money is doing. Okay, so let's get over to the actual chart over here. And I've shown this a couple of times in our client sessions. I think there's another video on silver that we put out here on silver squeeze within the last few weeks. Okay, this is really what's going on with the managed money, and this is from the CFTC. Okay, this is just saying, this is exactly how many contracts there are in open interest on silver. And you can look at this for gold, oil, whatever you want. They have all sorts of this kind of data. It is a very jumbled mess and hard to read, so a lot of you may not even know what to do with it now that we're looking at it. Okay, I'm going to make it a little bit easier. I like to follow along with the managed money. And I want to know what they're doing because they allegedly do lots of research with fancy tools and maybe insider information that we don't have access to. So I want to know what they're doing physically, volume-wise. And we know that. Here are their long positions. They have 74,373 long positions of 5,000 troy ounces of silver. So a heck of a lot of silver. Okay, and they have 27,000 short positions, okay, in silver. Okay, in recent reporting, okay, this is a change. They've added better part of 5,000 silver longs, and about half of that they've added shorts. So net, they've added, 2,100 long positions to silver this month. When I say 2,100, I mean 2,100 times 5,000 ounces times $25 an ounce. That's a heck of a lot of money, folks. So they're throwing more money at silver for whatever reason. The producers, the merchants, the processors, okay, they're primarily going to be, the people that sell silver, they may be long because they want the price of silver to go up. The people that use tons of it, Tesla's probably short on silver for a lot of reasons. And I'll show real quick. And this is not a brand new article. These charts have been around. You guys have probably seen this stuff. And I'm going to go through this quickly. But this is silver demand in millions of ounces by year, and this is just printed in flexible electronics. Okay, this is the cool, small electric bands and stuff that can get plugged into something quickly. There's just a ton of really small technology that silver's the best for because it's the best conductor on Earth. And if we're going to this electrical wave and we're going to be zero emissions and get rid of, fossil fuels, there's a lot of fossil fuel infrastructure we're going to have to get rid of and replace with something electrical. Silver is the best conductor out there. It has been kind of lagging copper's growth rate, and a lot of that's because of this paper silver ratio. But you guys can see every one of these graphs. This is talking about, millions of ounces of demand. Electronics makes up a third of that whole industry when it comes to silver demand. Okay, so investment interest is high. Otherwise, you wouldn't be watching this video right now while we talk about investing in silver. Okay, so investment demand is up, and so is pretty much every demand. And there's going to be more people next year than there was last year. I mean, the population is going to continue to grow. We're going to need more electricity, more electrical things, more Internet of Things. Everything has lots of powerful conductors these days. Your thermostat can be hooked up to the internet so that you can change the temperature at your house while you're at work or in another country. Okay, that type of technology is going to take electricity, people, okay, and lots of it, especially if we move to all digital money. And there will be absolutely no cash transactions anywhere in the world. We're going to need more silver. And that's the reason why people love precious metals, is because they are actual money. Okay, it's fungible. You can break it into pieces. That's what that means. It retains its value. Okay, so an ounce of silver today, let's just say they had silver when the pyramids were being built. It had value then. It still has value today. 2,000 years from now, my money's on the dollar not having any value. In 2,000 years, okay? Next few years, hey, I'm optimistic, because they've been kicking the can for my entire life since 1972 when we got off of the gold standard, and they've managed to make the thing continue to work. So I'm done looking at this stuff. We've looked at commitments of traders. Okay, you guys already know that the U.S. debt's huge. I'm not, blowing any heads off with that one. So let's go ahead and measure some levels on here. Actually, I want to get the auto tool here. This is silver. This is the daily chart, which I think is Goldman Sachs' favorite, primarily because a lot of times when they come out with price targets, they're going to use Fibonacci levels from this daily time frame. So what I think the hottest new level to come out that might happen in the near future is this, $32 range up here. I think it's roughly 32 bucks. Okay, I really think that is where, I may rip the tape on life, and try to cash out. Trading, I'm going to sit on silver. Those silver stackers out there are listening to me like, oh my gosh, I'm gonna keep silver until it goes to 3,000. Maybe that's a cool idea, but something tells me that there are powers that be that don't want the price of silver to go to 3,000. Otherwise, we would have already done that, because the money supply is up huge, demand is up and continuing to go up, and has been doing that for years. I'm gonna bet on the fact that people are going to try to depress this price. I don't know who those people are. I don't have to, okay? I just want to figure out where I may be able to buy and sell this thing. And right now this is our current market price in blue. Okay, so right now if I stick below this, 21.5 range down here, we haven't seen 21.5 since, July of 2020. So really doesn't. Well, it's going to take a lot for the market to get down there, okay? But a lot of people are going to look at this and they're going to say, well, silver fell like a rock the last few days, and it could come down further now. The point is that this level here, okay, I think I'm just looking for this to be my target. I may actually look for something a little more simple than a Fibonacci now. Get rid of that. I'm going to keep my lines that I've got, and I'm going to use my, one of my favorite tools right after the line is the box. Here it comes. And the reason why I love this tool is because what it's going to do is it's going to force me to pick some really popular prices with my eyes so that I can draw this on prices that the market commonly turns at. Because that's really what I want to find as a trader, is where does the market pick up and leave and go the other way? Okay? Is that right here where we are now? Is that at a lower price? Is that at a higher price? What's the deal? Let's get rid of this shading in here so you guys can see this a little bit better. Okay? And I'll get rid of our blue line. We don't need that right now either. Okay, but just to look at this, I want to make sure you guys understand why I picked this range and why I think that silver may stay within this $28 on the top and $23 on the bottom, why those levels are significant. So $23 to $28 is really where we've been living. And the primary reason why we keep living here is because every time we get down to that price, the market seems to make a move up. Okay, and that's why I drew at this price, because we've got pockets here. We had this is the attempted silver squeeze, I think, back in February. Okay, and the reason why that didn't work out is because, well, the market cap for silver is somewhere around 1.4 trillion. Okay, it's a little bit different than trying to push the market cap for something like GameStop, a video game store at malls that doesn't make any money anymore and really has no reason to actually exist. Because people that play video games probably don't like to go to the mall as much as they like to just buy stuff online, where most people buy video games. So GameStop is not a good investment, for one, but it's also a low market cap. So to turn over all the people shorting GameStop and squeeze them, it was a lot easier. Okay, when you're talking about $1 trillion market, you're going to need 100 times as many people as they had, which is already in the millions. So they would need a much more organized effort to just pop silver and just kill the shorts. You're going to need an incredible amount of volume to overcome, $1.4 trillion market cap. That's pretty huge. So right now, it is very obvious that, the producers are pushing down, and they have been, at pretty much $28. Okay, they don't really want the price over $28 is what it seems like to me. It also seems to me that, all the people that stack silver, okay, all the people that are thinking bull, and the stackers, the hedge funds, traders like me, $23 feels like a floor, because it has been 4 times. Really, I missed another spot over here where this was actually a floor again, because we broke into this range originally there, and that price was significant 4 times in a row. So anytime we get down to $22, $23, I'm thinking it's hot tonight. That's what I'm thinking. Okay, so if I get down, I'll make this box green. Okay, so we can understand this might be, super hot zone down here. And I'm just trying to give a strategy for people over time. Because, I could show everybody, really what I think is the best time. Maybe right now is a good time. A lot of people are going to want to understand how you can really not have to be right all the time and still end up being right long term. Because if I think that this thing can't really get below $22, I've got a stop loss down here at 21.4. Okay, so maybe I just look for places where I can enter this thing multiple times, and I try to be as conservative, distance myself as much as I can. But here's the bottom of our trend, and here's where we escaped. This is really the range that we're in, maximum high, maximum low that we've had since, coronavirus took over the world. And I don't know. So, entry points. Okay, if you haven't already gotten in, which is right here, okay, then really 618 is everybody's favorite. Okay, that's down here at 24.9, and I think a very strong price. I think very much could be, my opinion, best place where I might be a buyer with both hands. From there, the place where it turned around at last, down here. Okay, so a lot of people might just set pending orders at levels like these and just use that stop loss and limit. Maybe you adjust, maybe you just trade the range and you just don't worry about it getting out, and you stay in this box and you just try to exit every time you get to the top of your box. Because every time we get there before, the market seems to turn around. So maybe I just play this matrix, and if I enter on this bottom level, I don't necessarily have to get out. I can continually pile on or, take off positions as I work this box. But the reality is I just want to buy at the bottom of my box and try to get out at the top. I know that, a lot of people are looking for complicated state-of-the-art technology, and everybody wants to have this magical thing that figures out if it's a good time to buy or not. All of you have heard buy low and sell high. I literally just measured out a box, okay, and I can measure what the low prices are. Everything under 50% is a low price. Okay, so if people are bullish on silver and we get below 50% of the previous wave, then that indicates to me that it's becoming a good price. That's really what that means to me. So I don't like to buy until we get to that point. Reality is you can hold multiple different extensions, so you can try to get out at whatever price it is that you think is best. Maybe it's this, 31 price. It looks like we've bounced off of our, our red zone below before. So maybe it's this 35 price. Maybe it's the all-time high way up here, around $49, $50. Maybe it's just a bit above that. Everybody's got different perspectives on this. Let's go ahead and clear this out. So the stackers that are watching this video are not thinking about the move that I just showed you to $32. But that would be more or less my strategy has been for the last 3, 4, 5 months. It's just to play that sideways box. And I think we've won somewhere around 13 out of 17 trades, something like that on silver. We've got active ones running right now. Okay, so a lot of people might just pull this whole range from this big wave that happened. And the reason why I chose these price levels to start this fib wave on is because this is really the biggest, pattern that we've seen, the biggest vibration in the market that has existed. And it began in 2008 when we bailed out the banks. And, we kind of sold our souls to the devil in 2008 just to make sure that companies like AIG could survive. Okay, so, or, Wells Fargo, people that like to rob people every day. Okay, so whoever made that decision, I'm glad, I guess maybe things are going to be better for our central bank. But regardless, no reason to dwell on that. Let's make money on the current situation, because the more the central bank mucks things up, the more they make the markets move. And, people like to get mad at people like, George Soros, for example, because he'll say things like, I don't care about that. I'm here to make money. Okay, but I'm not going to create these problems as far as, the scarcity for silver or, a dwindling value of the dollar. I'm not going to create them, but I will try to make money off of what's happening, because I have two choices. I can either get eaten by inflation or I can eat it. Okay, so if you look at this here and we pull this range from 2008 all the way back to the recovery that started to happen at all-time highs, we did come all the way down to our green level below. I may expect something like, my green level up top. That could be all the way up here at $56, $57. This is what the long-term holders are thinking. And it might take a few years for it to get there. This is a monthly time frame that we're looking at. So yes, there is money in investing in things. And yes, there's also a possibility to make money in the short run. If you are interested in getting an account that you can actually trade this kind of stuff with and do it in the short run with leverage, so you don't have to have as much money up front to have a pretty decent sized position, then send us a message. Check out our website, 123trade.com. We have lots more videos there as well, 123trade.com/YouTube. We have $22,000 in charting and education bonuses from our partners that we can get you for free just for funding a trading account with us. So you would be crazy not to at least check out the website, or maybe send us an email, brokers@123trade.com. But again, I'm Will Bridges from your team here at 123Trade. If you haven't already, press the thumbs up, subscribe, ring the bell. And otherwise, you guys have a great day. Be good or be good at it. Take care, folks.